Hello, it's Robert Miner with Dynamic Traders Group for their DT trade strategies for the week beginning November 1st, 2021. This is where we do about a 10-minute video for our Twitter and YouTube followers, as well as our Traders News members. To give you a little taste of what we do for our regular subscribers, which we do a much more extensive video with more trade strategies and a lot more markets. So before we get started, if you want to have more updates than just these once-a-week videos, we occasionally do additional updates on our Traders News site on dynamictraders.com. It's absolutely free. Go to dynamictraders.com, choose Traders News tab, sign up for that to have a membership in that. No credit card needed. There's no cost to it. We occasionally put up additional trade strategy videos are maybe just screenshots of some charts with a possible trade setup. You might as well check it out if you enjoy these videos. You might get some additional information as well as some additional education. So do that. Check it out. dynamictraders.com, our Traders News tab. And if you like these videos, hit the like button and pass it around to your friends. Okay, let's get started. Take a look at 2 or 3 markets. We're off last week, so we haven't done a video for a couple weeks. So we'll try and take a look at a few more possible opportunities than we normally do in these short videos. Let's start out with the S&P. Well, the S&P has continued to advance as anticipated 2 weeks ago following the weekly momentum dual look-back bull reversal, and of course it's continued to a new high. The minimum target's around 46.18. It's almost there, but that's just the minimum target because the weekly DT oscillator, only the fast line's overbought. That typically implies there's at least another week or two of net bullish trend, and probably the upside limit would be around 47.10, 47.11, somewhere around in there. That's the 162% external retracement. Here's the daily data, and if you looked at our video from a couple weeks ago where we updated the S&P, is that we had anticipated that this advance was a 1 or A and a 2 or B, probably a 1 or 2 because the weekly momentums had turned bullish, so it was more bullish than a simple ABC would be. And we had some targets around where my cursor is here. I don't remember the exact price levels based on closing data. The targets for a potential wave 3 high based again on closing data. Well, of course, it blew right through it and just kept advancing right up through the end of this past week. Only had 2 days where it closed lower on the day. So what we want to keep in mind here, and this is what's important, is that in Elliott wave terms, particularly because we've made a new high, is there should be a 5-wave impulse trend. So we have not, or the S&P has not made the wave 4 and then 5. Wave 4 correction should be at least 3 to 4 days. It should be comparable to this wave 2. And the only thing we've had in the past 2 weeks is 1 down day. So we should be within a day or two of completing what we would consider a wave 3 high, followed by 3 or 4 day correction, and that would be a wave 4, then followed by a new high. And that fits in with our bullish weekly momentums. Probably going to be bullish for another week or 2 or so. And the latest before a weekly high is made should be the week ending November 19th. Now that's 3 weeks away. So again, that's not a target that the market S&P will continue to advance until the week ending November 19th. It's just the probable latest time before a weekly high and this 5-wave advance is complete. So again, the basic outlook is ought to start a wave 4 pretty soon, 3 or 4 or 5 day correction, something along those terms. Should be a little bit longer typically than a wave 2, and then followed by a resumption of the bull trend. That would be the typical outcome of the current position of the market. And the only thing we want to be aware of is that should the SPX close below 43.99, that's what we got as the wave 1 closing high, that would void any continued bullish advance. But boy, as of now, that's a long way from the market. So hopefully we'd have a signal much earlier than a close below 43.99. Well, that's the S&P, what's probable over the next few days and actually the next week or two. And by the way, the upside limits we saw before in the weekly was around 47.10 or 47.11, and that's reinforced by a real significant price relationship for probable maximum advance of around 46.82. So that's about a 20-point spread there, which was they're both tend to be maximum target zones. So could have a ways to go over the next week or two. So we'll just follow this up every day in our DT reports. I updated notes and bonds a couple of weeks ago. I'll do it again real quickly. Is they've both made dual look-back bull reversals on their weekly momentum cycles. So they should be, again, net bullish, sideways to up, for at least another 2 to 3 weeks, if not longer. So that makes for some great trade opportunities over the next 2 to 3 weeks. Notes did make a new low a week or so ago. Bonds did not make a new low. So notes have completed their daily low on October 21st. They just made a bear reversal. In 3 or 4 days, when they make the next cycle and bullish reversal in the daily momentums, that's going to be an ideal dual time frame momentum setup on the long side. And that should occur for both notes and for bonds. Bonds have been relatively stronger, as we noticed in our regular report, in that the low made on October 21st with a higher low. So again, ought to be sideways to down for 3 or 4 days. The obvious time target, not the obvious, but the probable time target to complete that daily low would be Tuesday or Wednesday. That's the 2nd or the 3rd. This just shows the simple low to low, and that's based on closing data, of course. That's the 2nd, and then there's a significant time count on the 3rd. So that kind of falls in with a minimum of 2 or 3 days sideways to down. And typically, when we make a bear reversal in the daily momentum, it would be somewhere in the 3 to 5 days. So it really could be anywhere from the middle to the end of next week. But a great setup because it'll be a dual time frame momentum setup to continue the weekly bull trend. So before we continue on, take a look at gold real quick. As just one more reminder, if you want some additional updates besides these videos we do for YouTube and Twitter, check out our at dynamictraders.com and the Traders News tab. Again, it's a free membership to our Traders News and resources. And of course, the whole purpose of these videos is we hope you enjoy what you see and what you learn, and you'll check out our DT reports where you get updated every single day. Okay, let's take a look at the precious metals. So gold is unfolding more or less as anticipated. It's been net bullish for the last few weeks. That's what was anticipated following the dual look-back weekly momentum bull reversal. This is gold weekly to December contract. So the question is still question mark on how important this low was in the middle of September. Was it a wave 2 corrective low? Well, we won't know that unless gold closes above 1833.70, that last swing high. But so far it's been net bullish as anticipated. And however, we just want to keep alert that the week ending November 19th, and that's 3 weeks away, if gold continues to advance regardless of where it is, that should be the maximum upside before a weekly high is made, and a weekly high is usually followed by 3 to 5 weeks sideways to down. So it's not a projection it's going to be up that long. It is a projection that that would be the maximum time before it completed a weekly high. Let me give you a little tutorial, mini tutorial on momentum indicators. This is our DT oscillator, but all momentum indicators are about the same, stochastics, RSI, etc. Is that they perform a little differently depending on the higher time frame trend. For instance, let's take a look back here the last couple weekly cycles. The last couple weekly highs and bear reversals in the weekly momentum indicator, only the fast line reached overbought. And that's typical because these are corrective rallies. So frequently they don't get dual time frame or dual look back overbought as they do in the direction of the higher time frame trend. In fact, if they don't reach overbought, fully overbought, and make a bear reversal, that's an indication that it's making a correction and a reversal within, in this case, the higher time frame trend would have been bearish. So we're down here and we made a dual look back bull reversal. That's an indication that potentially the higher time frame trend is reversing. But at the least, if the higher time frame trend is bullish, if this is a wave 2 correction, which would eventually be followed by a bull trend to a new high, then the momentum indicator should be 2 or 3 weeks overbought before the price high is made. In other words, it hangs in the overbought zone when typically anyway, when the higher time frame trend is bullish, or it hangs in the oversold zone when the higher time frame trend is bearish. For instance, at this point in time, it was a bearish trend. It was a corrective decline, and this possibly is the last part of that correction. We'll see. What's going to be revealing is how long and how many bars the weekly momentum is overbought before it makes a bear reversal. Just for instance, let's say next week it made a bear reversal. That would be a strong indication that this corrective decline is not correct. If over the next couple of weeks it remains overbought and the market that would mean it would be sideways to up, that would be a strong indication the higher time frame trend is bullish. So that's the kind of things we follow up with our members of our DT reports, our DP report subscribers, and some additional education we give them. So right now the assumption is the weekly trend is going to continue sideways to up. So here's the daily data for gold, and it's been net bullish as anticipated. Not any real strong bull trend, and it hasn't closed above the September closing high, which it must do to signal that this corrective low is complete. But here we are as of Friday, this past Friday, is the fast lines reaching near the oversold zone. In other words, the daily momentum is reaching at a spot where it typically makes a daily low. And part of our strategy, in this case, a specific additional go long strategy. In our reports, we were already long from some time ago. But if the next daily momentum bull reversal is made with price above the swing low when the last daily momentum bull reversals made, that's a real strong setup on the long side, at least for a few more days sideways up, probably to a new high. So if you're not already long gold, the next 2 or 3 days more than likely we'll make that bull reversal. If we make it without having closed below the last swing low where the last momentum bull reversal is made, that is an immediate go long setup. So those are the kind of things we keep our regular subscribers up to date every day. So if you're interested to keep up to date every day on gold, silver, the GDX, Bitcoin, Ethereum, the stock indexes, bonds, notes, of course the euro, soybeans, crude, all of those every day we update, and we let you know when these setups are made. The day they're made, we let you know, so you're aware of the probable significant reversals in the market and the probable significant trends that are coming up. So that's it for today. Hopefully you have a fantastic week. Stay healthy, and check out our Traders News. Sign up for that, and you might get an additional little tidbit now and then. So that's it. Robert Miner, over and out.